Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Friday, the 29th of November in London. I'm Caroline Hepker.
And I'm Stephen Carroll. Coming up today, macro traders face their worst year since the pandemic, but things could be looking up for 2025.
Budget demands. France's far right wants more changes to next year's spending plans.
Plus, from Citi trader to cattle trader. The story of the former banking executive who's betting he can persuade farmers to swap livestock auctions for his online trading platform.
Let's start with a roundup of our top stories.
Wall Street's macro traders are heading for their worst year since the pandemic. The news comes as bankers contend with tighter margins and economic headwinds. Bloomberg's Tiwa Adebayo has more.
Investor confidence in making big macro calls this year has dwindled as data surprises have whiplashed bets on central bank interest rate cuts, a too close to call US election, and the shock unwind of a once popular yen-funded carry trade also rattled markets. As a result, some 250 firms, including Goldman Sachs and JP Morgan, are forecast to make 17% less this year from trading G10 rates and 9% less for currencies. That's according to analytics company Coalition Greenwich. The bright spot, currency trading, is expected to pick up in 2025 and 2026. In London, Tiwa Adebayo, Bloomberg Radio.
In France, the National Rally Party is pushing for further changes to the 2025 budget bill after the government conceded on key plans to raise taxes on electricity. Now, the group's president, Jordan Bardella, is calling for more adjustments, including abandoning policies on reducing drug reimbursements, no new or higher taxes, and indexing pensions to inflation. On X, Bardella gave Michel Barnier, quote, a few days to respond to his demands. Fellow National Rally politician Marine Le Pen told the newspaper Le Monde the Prime Minister has until Monday. Ben Bennett, the Asia head of investment strategy at L&G Asset Management, says investors in French bonds will be monitoring developments.
We know as well that lots of Asian investors have bought France bonds because it's a little bit like Germany with a little bit extra yield, but there's no such thing as a free lunch, is there? And we're starting to see that yield as high as it was back in 2012. I mean, that's the 10-year, 12-year high. So I think that could be another trigger to keep an eye on, and we'll be watching that before the end of the year.
Ben Bennett there from L&G Asset Management. The French government faces the risk of being toppled in the coming weeks as opposition lawmakers threaten to unite in a no-confidence vote over its fiscal plans.
Voters in Ireland go to the polls today after a general election campaign dominated by the cost of living. That's despite the buoyant Irish economy, budget surplus and recent giveaway budget. Outgoing Prime Minister Simon Harris is looking to return his Fine Gael party to power along with his coalition partners Fianna Fáil, while the opposition Sinn Féin is seeking to build a majority with other left-wing parties.
Sweden has sent China a formal request for cooperation regarding a commercial Chinese vessel and its potential involvement with cut data cables in the Baltic Sea. Prime Minister Ulf Kristersson told reporters that the Nordic country sent the request after previously expressing a wish to see the ship move towards Swedish waters. He added that the request implies no accusation against China. The bulk carrier Yipeng 3 is currently anchored in international waters close to Sweden and Denmark and was in the vicinity of the two high-speed fibre optic cables when they were cut earlier this month.
In the UK, members of Parliament will hold a landmark vote on assisted dying today. Lawmakers will decide whether to allow terminally ill people with less than 6 months to live to opt to end their own lives. The legislation was put forward by backbench MP Kim Leadbeater and stipulates that 2 doctors and a High Court judge would also be required to approve any assisted dying decisions. Co-sponsor of the bill, Conservative MP Kit Malthouse, says the debate is about personal freedom.
I mean, since I've been basically a teenager, I've always believed in choice, liberty and personal autonomy. And I can't think of a more profound moment that I would need those 3 things than when I'm facing an agonising death.
That's Conservative MP Kit Malthouse speaking on the Bloomberg UK Politics podcast. It's the first vote about the issue in the UK since 2015, and if the bill passes this second reading, it will still face several more parliamentary steps before becoming law.
Australia has passed a law banning children under the age of 16 from social media platforms like Facebook, Instagram and TikTok. Tech companies will be responsible for enforcing the ban and face fines of up to 32 million US dollars if they fail to comply. While polling suggests that more than 3/4 of Australian voters back the move, many argue it won't achieve its aim of protecting children from harmful content. Here is Australian Greens Party Senator Sarah Hanson-Young.
It doesn't actually make social media safer for young people. And that's the devastating thing about this. Because we know that there are families who are struggling with this. We know there are young people who are struggling with their body image, their connection with their community, their peers. Young people who are finding themselves addicted to these dangerous algorithms. But this bill doesn't do any of that.
Sarah Hanson-Young speaking there in the Australian Parliament. Meta, X and other social media platforms have expressed strong opposition to the law, citing concerns over its practicality and potential unlawfulness.
Saudi-backed Live Golf is said to be weighing a possible merger with Europe's DP World Tour. If successful, it would cement Live Golf's position in the golfing calendar and give the DP World Tour, previously known as the European Tour, significant financial heft. The talks come as expectations of a deal between Saudi's Public Investment Fund and the PGA Tour edge closer after more than a year of talks.
Those are your top stories this morning. Let's go to the markets right now, where the Japanese yen is surging close to 1% higher. Tokyo inflation data exceeded estimates, coming in hotter than expected. In terms of other markets we're looking at, shares in China have gained quite significantly, 1.3% for the CSI 300. Speculation Beijing might provide more support for the economy. That has also helped to lift other Asian equities. MSCI Asia Pacific Index up 0.2%. US and European stock futures this morning, a bit mixed. US Stocks 50 futures are actually in the red. Barclays saying that they're watching the OAT Bund spread because of the decisions in France, the budget debate, basically, that those spreads could push north of 100 basis points if Marine Le Pen continues to threaten a no confidence vote there. So that's another issue we'll be watching closely in markets today.
In a moment, we'll bring you more on that underperformance by major banks, FX and rates businesses, plus tell you the story of a former London finance executive who's now turned his hand to revolutionising the market for livestock. But another story that caught our eye this morning by our colleague Sarah Rappaport, who's been speaking to the luxury property tycoon Nick Candy, who's going all in on non-alcoholic wine. He says that he's the founder of the 2-year-old sparkling non-alcoholic wine label Wild Idol. Says he was inspired to get into this business because of a number of his friends and his wife who had given up alcohol, either temporarily or permanently. And he says that his goal is to create the Rolls Royce or Dom Perignon of zero alcohol.
Yeah, I like this idea. Sarah Rapport writes about it very nicely in terms of, you know, the taste and the quality of this zero alcohol champagne brand. I did notice the price.
Can't call it champagne, Caroline.
Well, yes, obviously it's not champagne, is it? But the thing is, the price tag is quite similar to champagne. It's something like nearly £30, which I thought was quite notable. I mean, maybe this is a story for the post-Thanksgiving crowd.
Yeah, indeed. Sarah describes the white version of this sparkling wine, by the way, as having fresh, crisp taste with apple notes.
Okay.
So there you are. Let's bring you more, though, on our top story. And it's that time of year when traders are assessing their performance. For the world's biggest banks, revenue in trading from foreign exchange and rates has been the worst since the pandemic. It's been a bad year for big macro calls. Let's bring in our finance reporter, William Shaw, for more on this. Will, why has this year been so tough?
So broadly speaking, banks have been hit by tighter margins and tougher macroeconomic conditions than in the last few years. That's according to data that Coalition Greenwich shared with us. I think what we saw is sort of confidence fading a bit amongst investors in making big bets on macro conditions. There were surprises in economic data that undercut bets that people were trying to make on interest rate cuts that central banks would be implementing during the year. People were also concerned in the run-up to the US election that it was too close to call, making it harder to place big bets. And then you had, if you remember a few months ago, the unwind of yen-funded carry trades around the action that happened with the Bank of Japan. And all that effectively made it a bit of a year of sitting on the sidelines.
Yeah, who has suffered the most then when it comes to these big Wall Street banks?
So the data looked at 250 firms, including like Goldman, Citi, JP Morgan, the usual suspects. It didn't get into numbers on individual banks, but the biggest year-on-year drop in general terms was among rates traders rather than FX traders. So the firms were forecast, according to Coalition, to make a total of $32 billion from G10 rates trading during this year, and that would be down 17% on last year. The comparative drop for FX traders is big, but at 9%, it's quite a bit less than that.
How do things look then for next year, Will?
It's a bit of a mixed picture. I think for rates in particular, it's going to be a bit of a continued darker outlook. So Coalition see rates trading dropping to $31 billion in 2025 and then dropping further again the next year, though that's a long time away and anything could change in that time. For rates in particular, there are sort of concerns about the banks' business being eaten up a bit by non-bank market makers of the likes of Jane Street and Citadel Securities that are expanding their presence in the market, and with bonds catching up with the electronification of other markets as well.
Yeah, absolutely. And thank you so much, Will, for being with us. Bloomberg's finance reporter William Shaw there, just taking us through that story. I mean, obviously hugely important and interesting at the end of this year. If you want to read more about it, Wall Street macro traders head for worst year since the pandemic.
But if you're considering any alternative choices, you should be comforted to know there is life after trading. Murray Roos, who stepped down as London Stock Exchange Group's head of capital markets last October, has decamped to his 200-acre farm in East Sussex. On top of the farm, he now wants to revolutionise the buying and selling of livestock in the UK. Bloomberg's Laura Noonan has been writing about this, and she joins us now for more. Good morning, Laura. Equity markets to cattle markets, quite the leap. Why did Murray decide to make this decision?
So, yeah, it is quite an interesting one. So Murray comes from a farming background. Well, his family would have had farms when he was in South Africa and Zimbabwe growing up. He always kind of wanted to get a bit closer to the land from living in London. So he bought this farm towards the end of the pandemic to try to teach his kids about how food is created and to try to get them into a more natural way of living. Then when he left LSEG, he started spending more time down there. He discovered how livestock is bought and sold and the way it's basically brought to auction. It's paraded around one of those traditional grandstands and the price they're set on the day. And he was quite frustrated that he would have no idea how much he was going to get until the farm manager actually went physically into this grandstand and paraded the cattle. So he decided it was time to take livestock trading on a digital journey similar to which equities went through during his trading career. And he decided he was the man who was going to try that.
It's a really interesting piece. You've got lovely photographs also, must say. Is it a hobby? Is it a kind of midlife crisis? Is it a real business? Is it doing well?
So it hasn't actually started yet. So far, they're just at the proof of concept stage where they're about to raise capital for it. So they have done a ton of research in terms of they've been speaking to farmers, auctioneers, people who they think will use this, and they've developed the solution. He is very much committed to this as being his next business activity. I mean, they're trying to raise £1 million for it. They see this as something that they can take forward. In terms of, I mean, there have been various attempts at this before, although not quite as advanced as this one. So, people tried selling livestock on Facebook back in the day. Facebook actually now bans you from selling livestock, or sorry, they tried advertising it on Facebook. Facebook now bans that. There are some classified ad platforms where you can buy and sell. Having spoken to people who are currently active in the livestock market, so the auctioneers who run them, they say that people still like to see the animals, that it isn't like, so what they're going to be doing on Livestock X, which is Murray's platform, is listing a ton of really detailed data about the animals. And they believe that is enough for people to make a purchase. If you talk to people in the auctioneering business, they say you can't beat actually seeing the cow. Now, that's something which I think people are going to go back and forward on, because it would be much cheaper to do it this way. And it's whether the value of actually seeing the cow is enough to make you want to pay an extra 3%, 4%, 5% to actually travel to the auction, pay the auction's commissions, pay the fees. I think it's probably also going to be something where these changes don't happen quickly, and farming is a very old industry. So I think it's also going to be something that it will take quite a bit of time for this to gain traction if it does as a significant alternative to livestock auctions.
Yeah, I mean, it's a fascinating idea that you'd revolutionise such an old industry in this way. I mean, what about the technology involved, Laura? What's the kind of proposition from that point of view?
So the first thing is it isn't blockchain. And initially I thought that they were going to put cows on the blockchain, which would have been great crack, but it's kind of pointless. So Murray's last job at LSEG, part of what he was involved in is LSEG's digital assets program, where they were trying to put some actual traditional trading on the blockchain. So I was like, oh, blockchain. But actually, no, because blockchain is a step too far for this particular enterprise. You actually don't need it, partly because the whole idea with blockchain is you have this permanent record of something which cannot be interfered with. And in the case of cattle, there's already a permanent government-held record for the cow. So you already have that part. But also, I think Murray does recognise that the customer base for this is quite a traditional customer base, and blockchain is a lot to get your head around. So it's more traditional trading technology. So it's more like if you think of how the equities markets were done through open outcry back in the day, and they're now done through electronic trading. So it's electronic trading. What else makes Murray's platform different to some of the more classified ad-based thing is you do actually transact on the platform. So it's not like we meet on the platform the way you'd meet on a classified ad platform and agree to transact. You actually pay Livestock X. They then custody the money until the cattle are delivered to the farm. They then release it if they're as seen.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.